am Daniela Cambone, and welcome back to the summer series here on Stansberry Investor. We are talking cryptocurrencies and coming regulations today after Gary Gensler, the chair of the SEC, has called on Congress to give the agency more authority to better police cryptocurrency trading, lending, and platforms. A wild west, he says, is riddled with fraud and investor risk. But could the biggest obstacles and issues in cryptocurrency regulation lie in the new infrastructure bill? Are there hidden messages there? Joining me to talk about this is Vince Lanci. He's the founder of Echo Bay Partners and a frequent contributor to Zerohedge. Good to see you. Welcome back to Stansberry Investor, Vince.
Nice to see you again, Daniela. Good to have you. Good to be with you, I should say.
No problem. So I need you to break it down for us here. First, we have Gensler, who looks like he is cracking down, or his eyes are all on cryptocurrencies. First, can you speak to this before we look at the infrastructure bill?
Yeah, there's two things about that. The first thing is that what Gensler is saying is nothing that we didn't hear already. But what's happening is the government, for good reason, the government has basically said through the SEC, using Gary Gensler as a mouthpiece, they're basically saying we will not let the mass public in the US invest in cryptos without regulations, without protections. And what that means is you ain't going to get access to the United States broad money unless you go through regulated processes or exchanges. So, you know, things like what he did with what's going on with Binance there. And there's going to be more rules. That's the bottom line. And that has to happen before they feel that we're safe enough to be involved.
But this is not going to be a simple feat. We've seen how crypto companies have gone around regulations in the past, right, Vince?
Whenever you have an over-the-counter product or a product that's growing outside the mainstream US regulatory observation, there are, you know, cultural issues. You know, there's things there are rules that aren't followed through. And there are situations where yeah, there's some questionable things going on. But the real problem that the U.S. Regulatory agencies are going to have is that crypto contracts are not like as regulatable. You can't audit a smart contract. Okay, a smart contract is a piece of software on a blockchain, and they're going to want brokers and institutions to be subject to audits on these things when they don't lie on their own business.
So do you think that changes that we'll see will be more piecemeal and incremental than like a whole sweeping regulatory change?
I can give you what I think is going to happen tactically. You're going to continue to see what people unaffectionately call FUD, and you'll see negative things come out. Crypto is scary. Crypto is nervous. We're not going to let you into it. But at the same time, you will see, and we saw this week, you'll see companies start to launch products that are approved by the SEC. So Goldman Sachs, JP Morgan, Victory Financial, right, they're all releasing indexes that already have permission. So to answer your question, it's going to be, as the cliche goes, gradually and then all at once. So the gradually is what we're in now, and then you'll see some sweeping format come out that's meant to be the final nail in the coffin for anyone who's not listening.
So that's really interesting, and echoed another expert's point of view that I just had on what you said right there, Vince. What does it mean for the investor at home? And how should you be playing this? Should you only be going towards these products that are super checked, super regulated now, meeting all the requirements?
Well, it depends on the what's the word I'm looking for? Depends on the profile, right? Right? Yeah, it depends on that for the person. So traders who are familiar with trading things that are outside of regulated formats are already doing that. But the problem there is, even if you are well-intentioned, well-informed, and a savvy investor, there's still problems that the exchange may have or may not be doing in terms of reporting and things like that. I'm not sure exactly who's doing or not doing what, but the IRS is basically going to reiterate you have to pay your taxes. So the simplest thing to do is to, if you're a United States citizen and you have let's just say you don't have an aggressive profile, you want to stay to regulated exchanges. And I will give you one real point on that. One of my clients has a very large fund, and I suggested an arbitrage trade to him 2 months ago, and he's very well known, and he would not do it. The arbitrage trade was Bitcoin, but it was over-the-counter Bitcoin. It was, it was some sort of a crazy thing that I wanted to do that I thought would make money, and it made money, but that wasn't the point. He would not do it because it was not on a U.S. regulated exchange. He would only do it in the US futures. And so because of that, and I said, is it because of the risk? And he said, of course it's because of the risk. I said, so we talked about the risk. But in the end, he's like, it's not worth putting my investors at exposure for it if by simply not doing what the government wants, I end up getting a red flag pulled on me. And then it's going to end up mess up my investors' portfolios. And he was right.
It just feels to me that this goes against everything that Bitcoin was built around. And
yeah, you're right.
What the appeal was, right?
That's a serious problem. I mean, what they want to do to Bitcoin and cryptos in general is basically port it inside of a structure that it is going to obviate.
Right.
So we talked about this before. Smart contracts, eventually, like a smart contract, we're not going to get into how they work specifically, but it's kind of like having a contract on a blockchain that doesn't have to be looked at or altered or signed by a lawyer. It's immutable. And that makes a lot of people's jobs go away. But the infrastructure wants to keep its job. So they're going to try and take the contract and water it down and put it in the existing infrastructure. It's a bureaucracy versus libertarian type of moment.
Exactly. All right. Well, we'll see how that plays out. But what do we need to pay attention to in the infrastructure bill regarding cryptocurrencies?
Yeah, there were two statements, two takeaway points, and I wouldn't say that they were hidden, but they're definitely not there at the top of the bill. The first one was the bill defined brokers to include anyone who effectuates transfers of digital assets, and the crypto community immediately saw that for what it was. They said that means that anyone who transacts business in the system. So if you have a hard wallet and I have a hard wallet, and I give you Bitcoin, or for whatever reason, that gives them the right to audit me. That gives them the right to look at me to get to you. And I don't mean that in a paranoid way. What it ends up doing is it ends up putting a huge reporting problem on people who don't have the infrastructure. It makes it cost prohibitive to deal in the business. And a lot of the exchanges that are out there are in crypto because it doesn't have to report. It is immutable. It's there, and that's the first thing. The second one has to do with a little bit more esoteric and probably doesn't affect the investor immediately. The second one has to do with software projects and products. You can't just create a platform and say, okay, it's Bitcoin and plug into it. They're going to protect the investor by not letting predatory platforms be plugged into it. They want to make sure it goes through, the banks and people that are insured. That's all. They want to make sure there's no rogues. That's that.
Which isn't a bad thing. So not all regulations are a bad thing.
No.
Right. But do you think the regulators at the end of the day will be successful?
They'll be successful in broadening the definition of words and owning the middle of the whole concept that is trying to obviate their existence. The regulators will be successful in watering down the true qualities of Bitcoin and crypto for the mass of Americans. Will they be successful in watering down Bitcoin itself? No, but they will put a wall between the demand and the supply.
Vince, thank you for your insights as always. On a lighter note, how has your summer been?
Oh, it's been good. Thank you. A little busy. I started a newsletter last month called The Gold Fix, which is something that we talk about. My morning broadcast is The Gold Fix, but people wanted a written version of it, so I started writing it out, and that's doing very well. We're also doing Sunday classes, which are kind of a hoot. We're trading online.
Nothing to do with religion, though.
No, nothing with religion. Nothing religion. Just all about markets and all about primarily gold and Bitcoin, but market education in general.
Very cool. All right. Well, I will check out one of those classes. Vince, thank you. Come back soon, okay, to stansberryinvestor.com.
Thanks, Danny. Have a great day.
You too. And thank you for watching. We'll have more summer series for you coming up. In the meantime, remember to register for premier access, special offers, and very cool stuff you can't find anywhere else on DanielaCambone.com. That's it for me. Thanks for watching. I'm Daniela Cambone.